Good evening. The Indian markets extended its winning streak to fourth consecutive trading session today, but the main indices finished off sessions high due to concerns that higher than expected inflation could force the RBI to delay a rate cut. However, banking shares advanced today before the monetary policy announcement. But overall, the market participants remained upbeat as a global rally offset a mixed railway budget. A sharp drop in Chinese stocks weighed on the sentiment a wee bit, although other Asian markets finished mostly higher and Europe too extended gains. The Sensex was up by 105 points to close at 17,919 and the NSE Nifty was up by 34 points to close at 5,463. Among the BSE sectoral indices, the BSE Banking Index was the top gainer, up by 1.8%, followed by the Capital Good Index up by 1.6% and the PSU Index and Power Index rose by 1.3% and 1.05% respectively. On the other hand, the BSE Realty Index ended lower by 1% and the IT Index was down by 0.7%. The broader markets ended mixed with the BSE Mid Cap and the BSE Small Cap Index both ending at 0.3% lower. Notable gainers on the Sensex were NTPC, ICICI Bank, L&T, ONGC, Tata Motors and Hindalco. On the other hand, TCS, Wipro, Tata Steel, Jindal Steel, Bajaj Auto and DLF were the notable losers on the Sensex. The Indian VIX ended almost unchanged at 24.72. The undercurrent in early morning trade was strengthened by encouraging comments by the Federal Reserve on the US economy and the American banking sector. The US Central Bank also maintained a status quo on monetary policy. On the domestic front, inflation rose to 6.95% in February from 6.55% in January. The February inflation print came slightly ahead of the consensus expectation of 6.75%. The annual inflation rate was at 9.54% during the corresponding month of the previous year. Inflation for December was revised higher to 7.74% from the preliminary estimate of 7.47%. Chinese stocks tumbled in late session after Premier Wen Jiabo dented mounting expectation of some relaxation in policy for the property sector. Most other Asian markets finished higher, tracking the overnight rally in Wall Street in wake of upbeat retail sales data and Federal Reserve's monetary policy. China's Shanghai Composite lost 2.6% to end at 2,391.23. The sell-off came after Premier Wen reiterated the government's commitment to cool the nation's housing market. The Hang Seng Index in Hong Kong dropped by 0.2%. Elsewhere in Asia, Australia's S&P ASX 200 index rose by 0.9%. South Korea's Kospi gained 1% and Taiwan's TAIEX gained 1.2%. Japan's Nikkei stock average rallied by 1.5%. Financials led European stock markets higher after a broadly positive stress test result for the US banks and upbeat assessment of the US economy by the Federal Reserve. Thank you. Wish you have a great evening ahead.